401. Good morning, everyone. We're just waiting for a few other people to join us, and we'll start in another minute or so. All right, thank you, everyone. Firstly, welcome, ladies and gentlemen, and really want to thank you all for joining us today for this webinar on BlueMount Capital's Debt Funding Centre of Excellence. My name is Ken Freer, and I'm the Chief Operating Officer for BlueMount Capital, based in our Brisbane office, and I'm joined today by our Managing Director and Co-founder of BlueMount Capital, Dr. Mark Rainbird, who you'll hear from shortly. I'm going to begin by just taking you through the first half of our presentation, which will cover an introduction to and an overview of BlueMount Capital, the range of services that we provide, focusing in on our debt centre of excellence, the debt options that exist, and some of the factors that determine whether your company qualifies for debt funding. I'll then hand over to Mark to discuss how we can help you raising debt, the BlueMount solution that he and the team have developed and refined to enable the best outcomes for our clients. And then Mark will take us through a small sample of case studies with some of the companies that we've helped in the past. Following that, I'll open it up to take some questions from the floor, and then after that, I'll close the session. So on that note, that's us, as you can see. And so let's go into the company overview. So BlueMount Capital is an Australian corporate finance and advisory group with offices in Brisbane, Melbourne, Perth, Sydney, Los Angeles, and Beijing. Formed in 2011, it's the only national mid-tier corporate finance group in Australia that offers corporate finance and advisory services ranging from fundraising, mergers and acquisitions, initial public offerings, reverse takeovers, project structuring, cross-border transactions, and market access. BlueMount seeks to leverage the multi-office, multi-country experience and expertise, combined with senior principals that we have on board across a range of industry disciplines and product offerings. And we have approximately 80 staff in Australia, the US, and China. This slide outlines the range of our service offerings. I won't go into detail in them, but we'll come back and dial down specifically into the process and procedures for our debt raising services. But in the interim, you can see that we provide corporate advice, including strategy, advice on structure, do financial modelling. We help you with a strategic roadmap development. We produce investment teasers to source funding for you, and we manage the transactions and help you with the exit pathways as well. In addition to the commercial and corporate debt, then we also raise equity capital, do mergers and acquisitions from either buy side or sell side, offer curated investor opportunities, and we work across with experience a wide range of industry sectors. And we can also assist with bonds, sukuk financing, funds management, and IPOs. As an introduction to BlueMount Capital, we're proud to say that we've had more than 10 years experience at successfully raising capital for clients, both in the equity and debt capital markets. The BlueMount Capital team is made up of highly qualified and experienced professionals who have extensive experience in all aspects of corporate strategy and business operations and capital market transactions, and across a broad range of industries. We focus on deals that are greater than $5 million. However, we can do smaller deals, which can be funded through debt, and then deals under $5 million can be undertaken with our sister company funding strategies. The decision to obtain debt or equity depends on a range of factors. The key ones are listed down here below on the left-hand side, from timing down to investor ready. And just to quickly go through those variances, with respect to timing, then debt is quicker to arrange and source than equity. The debt funding doesn't require a valuation. I missed the corporate structure. So there's more flexibility around what your corporate structure is when you're sourcing debt. In terms of valuation, debt funding doesn't require a valuation or share capital structure. There's no dilution factor for existing shareholders when sourcing debt. However, for debt, assets of your business or your personal assets are often required for security. There's a cost of capital implication. Both both have fees involved, but with debt there are interest charges, obviously, and the principal needs to be repaid. And on the equity side, while there's no need to pay back capital, there is the cost of dilution. Investor exit is another factor, being refinancing or paying back by cash flow over time, versus if it's equity, then it's often via a trade sale or a listing. And for investor ready, there are similar requirements in terms of making available cash flows, P&L, balance sheet, forecasts, business plan, and an investment teaser. And so what are the various debt options available? Well, there are many forms with each of their own characteristics. We've got business loans that are used to fund business expansion or refinance current debt facilities. There's equipment finance, so facilities that are used to purchase specific equipment for your business. There's debtor invoice financing that brings forward cash flows from customers who have already been invoiced. There's trade finance, which is funding for the purchase of inventory prior to on selling to customers. There's venture, which is lending on a multiple of recurring revenue. There's R&D lending, so lending on R&D expenditure and a future R&D tax refund. There's acquisition, so lending specifically for your business to purchase another existing business. And convertible notes, which act like a business loan but can be converted into equity in the business. The types of debt funding available for a specific company depends on a number of factors: the nature of the business, the industry, its business model, its current status and financials, and so on. And each debt funding option and specific funding party has different requirements and criteria. And I'll just go through a few of these now. So secured versus unsecured. So some lenders require security, business, personal property, directors' guarantees, etc. that are pledged towards the loan. Other lenders may not require security, but tend to lend smaller amounts and also charge higher interest rates. And generating cash flows, so lenders will need to see historic or contracted cash flows that will be generated by advancing the facility to ensure that the principal and interest of that facility can be repaid. And then just a business trading history. So debt funders tend not to lend to companies that do not have a trading history, i.e. they are startup businesses. So most funders will look for a trading history of around 2 years before considering an application. As well as these, there are your credit history. So funders will review the company and the director's credit history to be sure there haven't been any previous bankruptcies or defaults on previous debt facilities. Current debt, so funders will review the company's current debt facilities and balance sheet, and therefore having too much debt or having multiple debt funders can create issues for lenders. Cash flow, so cash flow needs to be sufficient to give lenders comfort and the ongoing payment of the interest. And security, funders will review possible security options around the company. And then finally, exit, you need to be able to pay back the principal via refinance or from cash flows. So how can BlueMount Capital help with raising debt? So I'll now hand over to our Managing Director, Mark, to take you through the specifics of how we help and also some case studies of the companies that we've helped in the past. Thanks, Mark.
Yeah, thanks, Ken. Yeah, so essentially when people come to us regarding a funding issue, part of what we've got to do is solve the issue. So it's not just about getting the money, but it's also helping the company move forward. And in terms of that, a lot of what we do is help get them investor ready, if you like, with regard to the funding solution that we're putting forward. So quite often we help them with strategy, making sure that's appropriate for the business, making sure the corporate structure meets the requirements. So, for example, sometimes we see organisations that have a lot of trust type structures, and even quite often lenders don't like the trust structures. As Ken talked about, quite often what we're trying to do is match a funding strategy with the business strategy, and that might involve different tranches of funding coming in over time based on the business strategy that we're seeing and discussing with the business. We also help the company get investor ready. So this is around being able to present to the funder appropriately, a really robust financial model with all the assumptions, appropriate investment documentation, and if we need to get valuations done in regards to either the company or assets, we can assist with that. From our side, we're also strategically sourcing our debt counterparties. So we're very well connected into the fund and debt ecosystem, and so we're strategically approaching our parties based on the strategy and the funding requirements that we see from the client. And so it's a very bespoke solution that we're providing to our client. And then in terms of once we've got a term sheet, then we need to manage the deal, negotiate the deal, and manage the stakeholder relationships, etc., in terms of negotiation around covenants, security, and just the loan arrangements in terms of legal documentation, etc. From our side, we normally appoint a client manager to each of the matters, and so they help engage and manage the transaction from our side, and we can also assist clients in terms of a post-transaction. So quite often, funders like to see that a corporate advisor has been engaged or is helping the company move the company forward in terms of from a governance point of view. So in terms of what we're looking for from the client, or the prospect in terms of initial request. It's basically get some initial material, understand the issue that we're trying to solve, and then basically, as Ken discussed, sort of screen the business, around a number of requirements around, how fundable is the business, what is the turnover, profitability, cash flow, other recurring revenues, understand the balance sheet issues and what security is on offer for the lender, making sure that we've got a view on timing issues. So quite often there's issues within the business that we're trying to meet a particular deadline in terms of a funding solution. As we mentioned, we would also have a quick look at the corporate structure. And then we need to be very clear around what the use of funds is, whether it's taking other lenders out, or growing the company or buying equipment or whatever the funds are being used for. And then we are also making sure that any potential issues, including defaults on bank accounts, dishonors, if there's ATO debt, for example, we've got a view of that before we start so that we can help mitigate those issues as we move forward. We also understand what the jurisdiction we're operating in. So often we do cross-border. So generally Singapore, Hong Kong, Australia. And we also have a view of ESG values of the company and the funder. So we need to match those depending on the industry and segment and what's happening there. And then really our job is to provide options and a proposal to the client on how to move forward. So once we've done our initial review, then we can then present some options to the client and the client can then decide how to move forward. So what I wanted to do now is just give some practical examples. So this is not an exhaustive list, but I've got 3 or 4 here that I just wanted to go through. So we've got some case studies where we've previously funded different businesses in a range of sectors. This one here, we helped act on the buy side. So we were buying a business of Sandvik out of Sweden. It's in the mining services space. We assisted from a corporate advisory perspective around the acting for the buyer. And we sourced a number of solutions for the buyer around funding the ultimate acquisition. So essentially, we help fund the acquisition and also some working capital for the business. So we were providing essentially corporate finance, advisory, structuring services. In this case, it was acquisition finance. It was circa sort of 27 plus mil in terms of that acquisition. It was quite a complex transaction, and in this case, it was a rolling close of assets of the business, not actually buying the business. And we were buying the stock and people and IP of the business. So if you go to the next one, Ken. This is a recent transaction that we've just completed. So this is a vehicle leasing company. We've been able to provide some working capital for them. From a funder's point of view, the business has very good contracted revenues. In terms of the leases they're writing with their clients. So it looks like annuity revenue from a funder's point of view. And essentially, we were looking to fund some asset finance and working capital for the client. And this is part of an overall strategy from our point of view in terms of working with this client in terms of moving them forward and growing the business. So we were able to get a venture debt facility around $500,000. It's unsecured, which is important to the client. And then we've also provided assistance around getting the company investor ready. We've also started to supply some virtual CFO services and we'll work with the company about its growth strategy moving forward. This next example is a very, very large gym, fitness and performance group. Essentially, they don't have very many assets in terms of security. So essentially, they have fit outs at their centres, and they were looking to grow the number of centres that they wanted to develop, and they were looking for a funding solution. We were able to provide a reasonable facility at the time based on their assets and their growth potential. We negotiated with in this case it was just straight bank finance, but one of the things we were able to do is negotiate the covenants. So as their business grew, the bank was able to forward further tranches of money to the client. And the other thing we were able to do is, because they were in the retail space, we negotiated that they didn't have to hold a cash bond for their leases. So all of those things were part of the facility that we arranged for the client. And since this initial funding, the business has gone from strength to strength. The next one's a manufacturing business that we acted for. So this was a Melbourne-based business, large manufacturer of household consumer products, essentially looking for expansion to build new facilities, manufacturing facilities, and expand their production facilities. So this was basically a large business loan. So this was 39 million plus. So we basically did senior debt, invoice finance, trade facilities, because they were buying ingredients from offshore for their manufacturing. I think we also supplied credit card, and a whole range of sort of banking services, as part of the facility. And we also secured an overdraft as part of the arrangements for the client as well. So that was very important for them, so that they had sufficient working capital to move the business forward.
Okay.
So in terms of the information that we need to move forward, basically what we're looking for is a business plan or summary, current financials. So we do a quick review of the current state, if you like, of the business, understanding, what other security is available. So sometimes we'll need to understand the asset and liabilities of particular directors if there's personal property involved. Obviously, from our side, we need to have a really good view of the cash flow and the future cash flows of the business, because really that's what the funder is funding or getting paid out of. And any material agreements, so future contracts around revenue, etc. And then any key contracts, that the forecast is based on, for example, is important.
All right, thanks very much, Mark. So now I'll open it up just to any questions that you may have. You just need to take yourself off mute and then ask away.
I'll ask a question. What are your typical fees?
So it sort of depends on the scope of the assignment. So essentially, if we need to help package the company, as we call it, there'll be fees to provide that corporate advisory work. And then normally we take a fee in terms of the transaction size or the how much money we raise. So we're aligned with the client, if you like, in terms of taking risk on the transaction, and then obviously we would get paid at settlement on when the money comes in. So essentially, the initial fees would depend on the work that we would need to do or the scope. So if the company was very well packaged, had all the cash flows and all those sort of things, then those fees will be sort of minimal. If we need to do more work, then obviously those fees could be a little bit higher. But it sort of gets back to on a case by case basis in terms of what work we need to do.
Any other questions? Okay, well,
it's just a quick one.
Hi, Paul.
Got a chance. On the investor side,
Yes.
For debt placement, the terms of that debt, what are they generally?
So quite often on the investor side, we might bring people in on convertible notes, or it depends on the instrument we're looking at. So from an investor point of view, typically we would, the investor could get 10% return. So it sort of gets back to what the current interest rates are and the current interest rate environment. And then if we were doing a convertible note, for example, then normally we write the note such that the investor has the option to convert. So it's in the investor's hands. So quite often those instruments will have a term. It could be 12 months, could be 18 months. And and there could be milestones in terms of when the note converts. So the company might have to hit milestones for it to convert. So it could automatically convert, or it just converts in the hands of the investor. So if the investor's got comfort, they're watching the business for a little while, then they can convert. So so typically we see anywhere from maybe $250,000 to maybe $1 million, for individual investors doing convertible notes. And then from a debt point of view, if we were doing debt for investors, typically we're dealing with institutions or larger groups, but there could be some options there for individual debt funders if that's what you're having a look at.
Yeah, no, that makes sense. And also the option for the conversion would be to ordinary stock or convertible preference or something like that.
So normally we just like ordinary shares. So we try and keep it really simple, rather than having fancy, different share types, if you like. But essentially that would be all covered under the note. So quite often we would work with the company and do a draft note, for example. And if the investor was the counterparty, obviously, then they would review the terms, and then we negotiate them, and then we would get it papered up by the lawyer to finalise it. But we've had quite a few transactions recently around bringing convertible notes, which provides some upside to the funder, because then they can convert into equity if they really like the business. And then from a funder's point of view, from a company's point of view, if they do convert, then obviously they don't have to pay the money back. So it's an interesting instrument for both parties if you can get the right alignment.
Okay, thanks for that question, Paul. Is there any other questions from the floor?
I have another just regarding your the counterparty. So are your investors Australia based, or are they global in terms of, I guess, the investors and the terms offered? Because and the reason for my question is I've sort of worked with brokers in the UK, for example, that can bring term sheets from Singapore, Canada, all over the place, and they look very different to Australian-based term sheets.
So we're global. So I'll give you an example. We're acting for a Singapore company at the moment. We got a term sheet out of Hong Kong the other day for $10 million US. We got another term sheet the other day for some mining services businesses here in Australia for circa $8 million. So we match the funder. I guess what I'm trying to say is we match the funder to the matter. We have some very large offshore funders that have specific requirements. So, for example, we've got a fund out of London that does ESG stuff, and so you would need to tick all the boxes on the ESG thing to, to get them to fund. And then the other thing that we see is quite often a lot of funders have a minimum check size or deal size. So, for example, I was in Sydney early in the week, and visiting a fund down there that we know. And for example, they don't start, they start at like 10 million. So, so what we're doing, if you like, is curating the deal, matching the deal and the opportunity with some funding options. Then we're matching them to our investors, and we do it in a bespoke way because we don't want anyone's reputation or credit score or any of those things to be damaged in terms of going out to market. And then basically we would build a strategic list on who to approach. And then on the funder side, we also want to look after our relationships on the funder side as well. So we want to put a deal in front of the funder that we think is going to fit, and that they're going to do. And then what we're going to try and do is negotiate that and get it done. Because the reason someone's coming to us is they want the money. So we actually want to get that money in a very professional sort of managed way for both parties. And if the funder says no, that's fine, then we can move to somebody else. But it's a journey, and we learn a little bit as we move forward as well. But we have a very good we have depth and very good counterparties, and we've been doing this a long time. And I guess we have developed this concept a little bit, even just for the BlueMount group. So the rest of the BlueMount are looking to, refer us, transactions that we can complete. So it's basically becoming a specialisation of this team in the Brisbane office.
So Charles, I saw that you had your hand up. Do you have a question?
I do. I love the screen. It reminds me of my Melbourne University footballing days, because royal blue and black are the colours of Melbourne Uni.
Right. Okay. That's good to hear.
Anyway, I can't remember. Have you guys done anything in the cannabis space locally and or globally?
Yes, we have. Yes.
Wonderful. Good. Because a lot of opportunities for you. So it's good to hear your presentation. But I'm secretary of the peak national body for cannabis in Australia, but I'm also on the international board. So of the global federation. So it's good to know that you've got some experience in the space. Some people say, "Oh, I don't want to touch cannabis," but it's a huge, wonderful opportunity. So I will follow that up with you guys.
Yeah, we've sort of separately, just from straight debt, we've got we've got equity investors in that space, and they've come in on some of our matters. So BlueMount also, as Ken mentioned, does equity as well as debt, and quite often, and that's a good point, quite often the debt informs the equity, or the equity informs the debt. So sometimes people can come to us for equity, and we might be able to bridge to the equity using debt, because the equity takes a bit longer to get, or they might be complementary, where you might need to fix up your balance sheet first. We might need some equity, and then we'll go, we can then go get some debt, or we might need to get some debt, and then an acquisition is a perfect example where we might load up the balance sheet a little bit and take a target and the current company as collateral. And then the next step is, okay, we need to fix up the balance sheet, so then we'll go get some equity. So the debt informs the equity, and the equity informs the debt. So
that's helpful. And when I say cannabis, the medicinal cannabis space raised a lot in the Australian and global markets, but our focus is on industrial cannabis, industrial hemp, which is far more prospective than the medicinal cannabis. Medicinal cannabis is great, but industrial hemp is far bigger. Yeah,
so we've seen some matters out of North Queensland recently around industrial hemp. So we're wanting for them to harvest so they can make some money, so we can fund them. Nice. It's a bit hard to fund someone if they haven't got any revenue. So certainly we've got and hemp's been used in the industrial market in Australia for a long time, right? So it's not new. It's maybe just the scale has changed.
Yeah, the funding is required to scale up, and just for everybody, just to, people, AgriFutures came out and said, "Oh, this is an infant industry." Well, there are globally there are 27,800 patents using hemp. 27,800. So it's been around a long time, and it's really such a wonderul solution for many companies in the ESG space and circular economy. So hence its big growth opportunity. So
yeah.
I'm happy. That's good that there's a
But
possibility.
So we previously got involved in funding pallets, shipping pallets made out of hemp. I think the CSIRO was doing work there. But yes, we've got good experience around both medicinal and industrial.
Excellent.
So we're essentially reflective of the Australian and the Queensland economy. And we also do cross-border. So we see deals out of Singapore and Hong Kong primarily. And so we have companies going outbound for expansion, or coming inbound into Australia. And then, a lot of our funding is used for, there's working capital or and other things we haven't really spoken about, which are larger tranches around project funding. So if you're, looking to build a new facility, for example. So, all good.
Very good. Excellent.
All right. Thanks for that, Charles. Any other questions?
Yes, who's going to win the football on the weekend? Oh, sorry.
Who are you? Or are you going for Carlton because you like the blue and?
Well, it's a good point, because I, when I was at Melbourne Uni, people would say I live in Carlton. Well, I was born in Carlton, but no, I'm an Essendon. I'm an Essendon supporter in a state of great mourning, and and I will publicly go on record that I think it's going to be a Sydney-Brisbane or a Giants-Brisbane grand final. So there you are. No Victorian teams are going to get in the grand final.
There you go. All right. Well, all the best for next year with the Dons anyway.
Thank you. Thank you.
All right. Any other questions?
Are you guys investing in operations outside of Australia?
Well, we have funders. So the answer is potentially. So as I discussed, we do act for clients that are offshore, and we're doing. We've got a number of assignments at the moment within BlueMount. There's matters in Malaysia, Singapore, Indonesia, Hong Kong that we are acting for, and a lot of those are around either acquisitions or purchase or development of manufacturing facilities, or just straight working capital. So it sort of depends on the matter, and it also depends on our like the jurisdiction. So we would review the jurisdiction. So there'll be various countries that we wouldn't be too excited about. But certainly a lot of our for example, a lot of mining companies, are operating offshore, in different jurisdictions or whatever. Right? So we normally follow the client out, if you like, in terms of where they're operating, and then the only issue for foreign jurisdictions is doing due diligence. So normally, depending on where it is, we would be clear around that we would need to be comfortable about the due diligence in that jurisdiction. And then there's also.
I'm sorry, I might have missed most of the talk, but do you guys like to invest in more the retail side or more the supply chain? Where's your sweet spot?
So basically, we would have funders that would do all parts of the supply chain. We're probably, our experience is more B2B, but we do see. We do see B2C, and we've got we see a number of internet matters all the time, predominantly under our other brand Funding Strategy, which is more a sort of venture brand. Like they tend to be younger companies, and there's other issues with those sort of businesses around just making sure things are trademarked and which jurisdictions you're operating in and which platforms you're operating on and all that stuff. But some of them can be really high growth, very, very fast moving businesses, if I can say that.
Sure. It's I mean, it's agriculture, but it's not. It is very interesting. What's your average ticket? How much do you usually like to invest first time out?
Well, so as per the discussion we went through, essentially BlueMount sort of concentrates in the 5 to 50 mil range, and we have another business called Funding Strategies, and essentially we started $500,000 through to maybe 3. But it would depend on the matter. And then just to be clear, we're assisting getting the funding. We're not necessarily the money, if you know what I mean. So we would help.
Yeah, you structure it. I run an MFO and I will work with the BD, so like I'm familiar.
Yeah. And then the other thing is we do, as Ken talked about, we're doing a bond at the moment for an ASX listed, so that that might be 100 million ticket size, right? So there are larger deals that we're able to do, and then it gets back to offtake agreements and ESG considerations and those things. So that one in particular is a green bond that we're assisting with.
Very cool.
Okay, thanks, Alex. Any other questions?
I'll probably reach out after.
Cool. Do you want to just go to the next slide with our contact details, Ken?
Yeah.
Yeah. So if anyone's got any queries or questions, just flick us a note or contact Ken or myself, and certainly, we can have a quick chat, and then we'll get some info, and then we can see how if we can assist.
All right. Well, thanks again for joining us today.
Thank you so much, guys.
We have made a recording of this, so we'll be sending you a link for that if you want to go back over any of the detail.
Yep. Very good.
And thank you again.
Well done. Thanks, guys.
Okay,
very
thank you.
good.
Thank you, guys.
Okay,
Have a good one.
Thank you.
Bye-bye.
Bye.